All right, sorry about that little pause there on the black screen of death, guys. Thank you so much for joining me for another episode of Breaking Bitcoin, guys. I'm your host, Justin Wise, lead analyst and senior mentor at Kraken Cryptocurrency. It is Thursday, guys, March 28th, 2019, foul year of our Lord. Hope you guys are doing fantastic wherever you're tuning in from. Now, I apologize that we did not have a show yesterday. Had some family situations that I had to take care of. Thank you so much for the DMs. Thank you so much for the questions and everything that people sent to me. Everything's fine. Everything's doing well. Personally today, and this is just par for the course, as it would be, guys. I feel like I'm coming down with something. It was a little sluggish this morning when I woke up, and I'm feeling that kind of scratchy thing in the back of my throat. So, Scott, if you're listening, I'm sure you are. Look out, man, because I'm coming down to the Chicago area to see you tomorrow, and I'm gonna get you sick, man. But looking forward to the trip, guys. Of course, I am going to be heading down to the Chicago area to go see the guys from Revival Tech Repair to pick up the new computer for the streaming setup, guys. So hopefully, come this time next week, we should have a much more optimized, and I mean, nothing will really change insofar as the look and the setup and everything. Of course, Scott did design all these custom templates himself, but we'll just have a much more powerful computer and allow me to do a lot more. So I'm looking forward to playing around with that. It's going to be really, really cool. Scott says, no, I'm coming down. I'm coming down with the Bitcoin, man. Coming down with that Bitcoin boogie fever. I also ordered the new green screen and the new lighting setup, so that should be here this time next week. So I'm not sure when I'm actually going to get it all set up, because we're talking about more of a little bit of a complicated, hang lights and all the right things and play around with it. And I'm kind of a perfectionist, so it's going to be one of those things. But really looking forward to that. So anyways, quick, get some emergency or airborne. I've got echinacea, zinc, and vitamin C and water. That's my trifecta. Whenever I'm feeling sick, I always take echinacea, zinc, and vitamin C. And I don't know why, but that stuff works. That stuff works. Of course, guys, if you have any questions, comments, thoughts, sarcastic remarks, and/or death threats, make sure to drop them in the chat as we move along. We've got some interesting stuff to talk about today. Of course, question on everybody's mind is the same question as it is always. Will Bitcoin go up or go down? Now, we do have the futures expiring tomorrow, so we're going to focus on that today a little bit heavy, and we're going to go kind of deep into quandle and commitment of traders reports and potential movements on the market. Now, this is a question that we get every time the CME contract expires. Hey, the CME contract is, and I see it all over the place. I see it on crypto Twitter. I see it in the telegrams. I get questions all the time. And the question's always the same, or the statement is generally the same. All right, guys, the futures contract is expiring. Go all in long. Or the futures contract is expiring. Go all in short. Now, having observed the markets for these past 2 years, going on longer than that actually, I have noticed and really over the last year with the CMEs, what I have noticed is that there is no definable statistical direction that the market moves upon CME future expiry. There's just no, sometimes it moves up, sometimes it moves down. It's as simple as that, right? So anybody that is using the CME futures expiring as a fundamental directional bias, I think is incorrect. Now, anybody using the CME expiration as a volatility meter, as a fundamental volatility meter, saying, okay, I have a long or short bias based on this, this, and this. This is what my strategy is telling me. This is what my indicators are telling me. This is what price action is telling me. And because of this fundamental event, similar to like non-farm payrolls coming out every month for the Forex market, which is the most volatile event every month in the FX market. So similar to that, saying that, okay, because I already have this directional bias, and because of contracts expiring tomorrow, I would expect a volatile movement. Now, that would be the correct assertion. So it's always important that when we're talking about trading, that we're using the correct terms, because the purpose of communication is to be able to convey effectively what we actually mean. And when we start using sloppy language, it becomes difficult to communicate with others, and it becomes difficult to really understand what the hell we're talking about. And this is the danger. This is why I try to point out errors in language. I spoke about the other day how one thing that you're going to see frequently, and again, I'm seeing it right now. I'm seeing it, in fact, in relation to what I'm just talking about right now with the CME expiry coming up tomorrow, which is, hey guys, the market is unstable. Be safe in your positions. Tighten up your stops or whatever. It's just, but that, I don't like that term. I don't like that the market is unstable BS, because that to me screams, I don't know what I'm talking about. Okay. Now, I would be fine if somebody says, well, I don't have a clear direction. I don't have a clear directional bias. My indicators aren't giving me a strong signal. My strategy isn't giving me a strong signal. Price action seems a little bit, woo-woo right now. So I'm just not sure which direction the market's going to move. And because of that, I'm just going to sit on the sidelines and wait for a clear signal. That is the correct language to use. And that is language that I can respect. And that is an individual, if I see them talking in that fashion, I'll engage with you further and be very happy. When somebody says, and this often comes from experts, whatever, the market is unstable. Be careful in your positions. I mean, that's the majority of an update that you're going to see from most of these crypto Twitter gurus or whatever the heck you want to call them. And the problem with that is that that's basically a cop out. It's a massive. Yeah, exactly. Turd Ferguson said it the same. I mean, of course the market is unstable. It's always unstable. You never know which direction the market's going to move because we don't possess crystal balls. So I really prefer and respect that proper language of, I just don't have a clear indication on which way price is going to go. See, that's okay. And that is definitely one of the things that it's going to help you. And that's going to be part of the trading psychology module for my course is understanding that you have to be humble as you approach the markets. You have to be humble in your strategy and humble in yourself as a person, and accept that the market is going to determine whether you're right or wrong. All you can do is enter a position, set your stop loss and your take profit targets based upon the best strategy that you can develop, a strategy that you back tested, a strategy that you forward tested with paper trading, and that you believe on average to be more profitable than not. So any one individual trader position should not make you question your strategy, should not make you question your position. Oh, while I'm on the topic, guys, for the premium subscribers, I have the new premium webinar in the money management module. I'm going to be uploading that today after the live show. So you guys will have access to that today, something for you guys to grind your teeth into. In that webinar, we talk about how to utilize my stop and target system. In that webinar, we talk about how to the proper trading psychology when it comes. So basically a deeper dive into what I'm talking about now. I show multiple methods of how to use the stop and target system, utilizing two different technical indicators that you can access in TradingView. One is a free indicator, and obviously one is going to be Quadriga ATR, which is available to subscribers. So it's a pretty deep dive into risk management, money management, and how to properly approach a position with a verifiable database stop and target system rather than a subjective stop and target system based off of psychological levels, price levels, trend lines, whatever. It doesn't matter. We don't. You don't want to set your stop losses and your take profits based off subjective levels, because if you have a stop and target system in your trading, and if you don't even have a stop and target system, well then you're doing something wrong already. But you need to have a quantifiable, verifiable method and system of stop and targets. The reason why is because if you're going to backtest any strategy, remember, it's not the individual results of any one win or trade, right? It's not about being right. It's not about being right in the marketplace, right? So as you guys know, I'm overall on the markets. I'm fairly bearish in the short term, right? I'm fairly bearish in the short term. Now that is my analysis. Should I be proven wrong by the markets? I don't take it hard because I've been proven wrong before. And I know that my strategy of trading is profitable in the long run. I know that at the end of the year, there is a high probability that my equity curve will be higher than that my equity will be greater, that my equity curve will be ascending. So my equity will be greater at the end of the year than it was at the beginning of the year, which has been the experience that I've experienced since I've been a professional trader. Now, that doesn't mean that I have bad months. That doesn't mean that I have bad weeks. That doesn't mean that I'll have a bad day. That is inevitable. It's an inevitable part of trading. You have to accept that chaos with humility. The fact that it's impossible to be right every time. I know amazing traders that will be analytically wise, very confident in a position. But it doesn't matter if you're confident in a position or indecisive in a position. You take the signals that your strategy gives you without question, because you've devised a strategy that is smarter than you are. Because at any individual moment, when you look at the chart, you're going to be taking everything with you into that moment in time. You're going to be taking your feelings. You're going to be taking your state of mind. You're going to be taking your rest amount. You're going to be taking your physical health. You're going to be taking the way your back feels. Everything is going to be compressed into that one moment in time when you look at a chart. And if you are looking at a chart and you are allowing yourself to make subjective decisions based on how you feel at the moment, it just becomes easy to do stupid stuff. It just becomes very easy to look at the chart and say, well, you know, I was really bullish when I entered back here, but I don't really like the way the market's moving now, so I'm going to go ahead and get out. Maybe at a loss or maybe at a very small profit, right? And then price ends up either, you know, moving up or moving down. It doesn't matter. The point is that you've allowed your subjective feelings to modify your strategy. Because again, you're going to look at the chart 12 hours from then and you're going to be feeling different. And you're going to think to yourself, oh, why did I do that? I was such an idiot. Of course I should have held on to that position. Of course I should have closed that position out. Now there's two important things when we're talking about that. If you have allowed yourself to adjust your strategy based on how you feel subjectively, don't beat yourself up, but you did do something wrong, right? You allowed your subjective feelings to influence a strategy that you know you should just follow, right? Alternatively, if your strategy has done what it's supposed to do and got you out of the trade profitably or at break even, which is what a good strategy is supposed to do, you don't look back then. You close the chart. Don't look back. Of course, it's fine to look back and monitor what you could have done differently, but you can't do that with future data, right? You can't say you take profit on a position when your strategy told you to take profit, and then you know the price pumps up another 15-20%. Doesn't matter. Doesn't matter. You would not have been able to know that ahead of time. And going against your strategy in the long run is going to lose you more money than it's going to make you more money. So just be very careful, because that's kind of one of those, it's one of the most common, and this is the most frequent thing in trading. People will look back upon their past decisions with regret. And if you are looking back on a past decision that was the function of your strategy doing what your strategy is supposed to do, then looking back with regret is pointless, because you are using knowledge that you have now that you would not have had back then. So that's absolutely useless for becoming a better trader, and really is just going to make you go crazy. It's just not helpful at all. It's just not helpful at all. The only useful aspect is when you, I would say, I can just tell when I started utilizing an if this then that strategy, I just know from back testing. Over the previous, and again, my back testing and my results and my record keeping became much better with an if this then that strategy. Very easy to objectively look at my trades, my history of trades, and see, okay, over the long term, what can I optimize? What am I doing well? What am I doing poorly? So, anyway, sorry guys. You know me, I wax loquaciously. So I want to say hello to all the people in the chat. What's going on, John, Jasper, Hands? I see Turd Ferguson. I see Third Eye Trader, Ron Legato, Mike Marcus. Good to see you guys in the chat. If I missed anybody, of course, make sure to direct your angry comments at Scott. Bernardo, what's going on? Wendy, what is going on, guys? Wendy says, thanks. Thinking basic attention token is about to go limp. Oh. 2 chords only in the music. Yuck. No, they're good chords, man. Let's see here. Bring the sick. Wester, you're welcome, man. Yo, I see you. Emmy, what's going on? Bound by Hatred. I think that's a Hatebreed record. I used to like Hatebreed back in the day. It was pretty good. It's pretty good trading. Rudy LaPlane says, in reality, if you actually understand what's going on with this place, markets have been unstable since day one, right? You know, the biggest lie that you learn in trading is that the market's always right. I think that's the dumbest thing that I've ever heard. That is the dumbest thing I've ever heard. Why is the market always right? If the market was always right, the market is always wrong, because if the market was always right, then price would in general be neutral. At least that's the way I interpret that question. Maybe we're arguing semantics here, but it seems to me that the market is always wrong because the market is always searching for the correct price. The market is always searching to pair buyers and sellers. The market's not there to be right. The market's there to be the market. Blockchain gains. I see you, man. What's going on? Michael Fariello says, my opinion, there is no volume, only bots. I believe it's just a matter of time before we dive down. The weekly RSI stochastic says it all. I think that there's volume. I don't think that there's only bots. I think that regardless, I think that if there are bots or there is so here's my problem. I think that bots are adjusting. So the bots that are operating on the market are going to be largely focused on diming the spread, whether the spread is profitable or not, and market making. I don't think that there are so many market participants that if there was one, and this is something that I've talked to a lot of automated traders about when it comes to cryptocurrency, because cryptocurrency is so profitable to trade if you're winning trades, that people think that there's just a magical strategy out there, right? They think that there's some gold-plated, beautiful, just magical strategy that the whales possess, right? That all these, like back-end super master crackers have, that they've just programmed these powerful automated trading bots that are able to be right all the time, and that everybody's using like the same one. And you just got to be on the inside club to get access to that information. You just got to join the right Telegram or pay the right Bitcoin to the right WhatsApp account, and you'll be good to go. And you'll just learn that magical trading strategy. It doesn't exist. It doesn't exist. There are so many market participants. I mean, I know people with large amounts. I know large traders. Who trade algorithmically, who use automated trading strategies, and they're different, and they're different depending on the day. The really good algo traders will switch their strategy up based upon market conditions, and they're always working and devising and tweaking and changing. So and you just know this objectively if you just analyze the markets. There's no predictable pattern that price moves in. There's no predictable pattern, because if there was, then everybody would trade that pattern. So the market is chaotic by nature. And the best that we can do is devise a strategy that is able to give us good entries and exits over a point of time, and develop a good eye for key indications like volume, for example, that can help discern and help guide our trading. So, I mean, there are better strategies than others. I would argue that the strategy that I teach, the strategy that Cracking Cryptocurrency Premium Trading Group utilizes, it's been very, very good to us over the past couple of years. It's been amazingly good to us. It's been very good to us this month. So there are better strategies than others, but there is no master password, guys. there's no Telegram that you can join that's going to give you access to this to the bulletproof indicator. It doesn't exist, but that doesn't mean that there are better strategies than others. So continue to devise and grind, put the grind and time in to develop your own profitable strategy. And again, that's something that we try to teach to our traders in the Premium Trading Group. Blockchain Gain says, nope, mind reads. Rudy LaPlane says, with all the massive amounts of legal disinformation, it's only channels like this where true crypto enthusiasts can try and make sense of it all. Grateful for this channel. Well, I'm grateful for you too, man. Thank you so much for your support. Reading, trading in zombie mode. Only way to leave the emotion out, says Bound by Hatred. That is true. Again, I saw this interesting tweet, and we're going to get into the technical analysis here in a second, guys. Don't worry. I saw this really interesting tweet that said, I think I talked about this before, but I can't remember who posted it. I saw this really interesting tweet the other day. Where some guy was basically saying, all these people who tell you to leave your emotions at the door, he's like, I'm way better than all of them. And, the drama is the most exciting part. Well, the problem with that is, hold on just a second, guys. All right. The problem with that is that I would like to see you at the end of the year. I would like to see your equity curve at the end of the year, and I would like to know, that really is the proof in the pudding, guys. So when people say they're good traders, just tell them to show you their account statement. That's really all it takes, man. Just look at their account balance in January, look at their account balance in December. right? If it's higher in December, they're probably a pretty good trader because the majority of traders, the 99% of traders, their account balance is less in December than it was. It's only irrational periods of the market, like the massive run up, for example, in 2017. And Bitcoin's kind of one of those rarefied assets where we've had the opportunity to get in the early startup phase of investment cycle, which typically most retail traders will never have access to. So Bitcoin's been one of those. But again, you have to realize that the more liquidity that comes into Bitcoin, right? The more liquidity that comes into Bitcoin, the less rapid it will rise, guys. So that's why, like, don't get me wrong. Like, I am a long-term believer in Bitcoin. I'm pretty comfortable with some of these more, and I don't really know what the point of it is. These profit targets for Bitcoin, like Bitcoin 50,000, Bitcoin 100,000, Bitcoin 10 million. It doesn't matter, right? If you look at Bitcoin as investment, then allocate an investment and set an area where you will start scaling out profit on a longer time frame, and follow that investment strategy. But for those of you who want to be a trader, who want to live the lifestyle of a trader, it doesn't really matter. All that stuff is fairly useless. And again, as a long-term believer and investor in Bitcoin, I have to wear two different hats. But you have to understand that the more liquidity that comes into Bitcoin, the less volatilely it will move, right? So I would make an argument that the movement from Bitcoin now to its next high will be much slower than the previous movement in 2017. I do think that the market is always changing and always developing. And now that we're seeing more institutional money and more regulation and going to see things like ETFs, we're going to see more regulated exchanges. Guys, there's going to be a lot of opportunity and profit in cryptocurrency going forward. It's the hottest. Well, I hate using that word hottest. That's dumb. Hot, cheap alts. But it is the newest, most volatile asset class currently. Doesn't have the most liquidity, but as it gains in liquidity and gains reputation and gains retail participation, more regular retail participation, Main Street, not Main Street, but blue collar participation, let's just use that broad term. We start seeing 401ks and pension funds investing in Bitcoin, for example, which we're already starting to see. That volatility is going to reduce and liquidity is going to increase. Why does the more liquidity in a market reduce volatility? I'll give you 5 seconds. Because you have more willing buyers and sellers at every price. If you have an infinite amount of buyers or sellers, then price will never move. You need a discrepancy between people willing to buy and people willing to sell for price to move. And remember, limit orders don't move price, market orders move price. So you need aggression and discrepancy. You need aggression and discrepancy. Jasper. It's not random. Not random, bro. All right, let's get on track here, guys. Zero, cool. What's going on, man? Theraflu is the best by far. Maybe I need to go get some of that. I'm gonna go down to the corner store here after the show. I'm gonna go down to the corner store, get some Theraflu, and then I think what I'm going to do is look for trades all day and play with cryptometer.io. Okay, so let's get over to the charts, guys. We're gonna look at the charts. We're going to look at the charts, and we're going to look at a couple news things here going forward. But we're going to look at Bitcoin and Ethereum first. Now, I do want to talk about the futures expiry, right? So let's talk about the DIY guy. What's going on, brother? Vitam Impendero Vero. Oh, we seek truth, man. Thank you so much, my friend. Anon says, you can. My paid group leader told me. I got a lot of requests. EOS, ARC, and Chainlink. Let me write these down. EOS, ARC, Link. DIY guy. I feel like you're taking shots at Kirby, man. Target psyops. DIY guy says, most volatile asset with low liquidity. Give me 100x leverage, please. Hell yeah. Quantum and EOS. I feel they are both bullish. Qtum, EOS. Everybody feels like EOS is bullish. And my feelings are great indicators. Link and ARC. Yeah, I already wrote that down. Tell me about MPXS and LabX ELD prediction. I don't know what ELD prediction is. Early. I have no idea. Usually I see EOI, MPXS, and I've never even heard of LabX, dude. The best indicators are emotions. MCO, MCO is good. I like MCO. I'm in MCO right now. And XRP. That's a lot, guys. That's a lot. IOST. Mainframe. BQ. Okay, guys, stop. MFT, BQX. I'm not going to be able to do the majority of these, man. What about that power? Texas Blue says, if you're feeling under the weather, try Buried Treasure ACF Immune Support. The best stuff for stopping colds loose. I'm buying that. That just sounds like I need to buy that. I mean, all that other stuff. Theraflu sounds good. I'm gonna have to get some of that too. But Buried Treasure ACF Immune Support. My good lord, dude. My good lord. Elastos surged 7%. Please look into this. Sir, this is cryptocurrency. 7% is not a surge. 7% is a 15-minute candle. That's my Wednesday evening. No, I'm just kidding. All right, guys. Let's get in here. XBT. Really what I want to talk about is the futures expiration tomorrow, right? We're looking at what I feel is a distribution pattern after rating previous highs right here. We didn't have an immediate rejection, guys, and I will be quite honest, right? Most of the fundamental metrics look pretty bullish. I'm not going to lie. If we pop on over here, we do see that the bid-ask sum is pretty bullish. Hopefully you guys can see that. I think that's probably hidden by the way that I have this set up. But anyways, we do see that currently, let's actually give this a nice refresh. We'll look at Bitfinex. Bitfinex has a bullish order book, but we do see the asks starting to spike up significantly, actually, since the last time I saw this. So about 11 million on the sell side, 11.3 million on the buy side. So actually, this is pretty interesting because this was really bullish just this morning when I was analyzing the charts and kind of figuring out where I wanted to move forward with my positions. But we're actually seeing a pretty huge spike in the ask, which does not surprise me. So we're going to go on top of Bitfinex. We're also going to look at BitMEX. Here we go, BitMEX. Looking at the bid-ask sum on BitMEX, no data available for selected parameters. You know, I noticed this earlier. I don't know if Bitcoinity dropped BitMEX or if it's just like, or if this is just something that I'm doing wrong because I'm dumb. I don't know. Anyways, Coinbase, the Coinbase order book is actually looking still bearish, actually, still way more asks than sells. Actually, we never even really flipped bullish. The thing is, during this price pump, guys, look at the rise. This is on Coinbase Pro. So within 5% of price. So within 5% of price, look at the increase of asks as price was pumping up. So this is actually different. And I do like using Coinbase as kind of my go-to spot index of choice. I don't really like using Bitstamp. I like using Bitstamp for long-term historical technical analysis. But when I'm looking at other metrics, such as like volume and price action for how price is likely to move, whether in the short term or in the midterm, because you can't do volume and price action for long-term movements. You have to do long-term historical technical analysis for that, in my humble opinion, or imply some form of fundamental analysis, like sentiment analysis, for example. But Coinbase actually never on the order books flipped bullish. Within 5% of price, we remained bearish. Our asks, in fact, rose. And when you start seeing that, increase on the sell side, and then you see a drop off, that is letting you know that open interest is falling and those orders are getting filled. And people are exiting out of positions. So, because in Coinbase, remember, you can only buy or sell. It's binary. You can't go long or short. So. You can't short sell. So that hopefully that makes sense. When you see limit sells rising up on the order books, DIY guy says, bro, order books are the first place of manipulation. Yes, on a lot of coins. I would argue that as opposed to what though? Because if the order books are being spoofed, And again, on things like Coinbase, you're going to get a lot less order spoofing. On things like on other exchanges, you're going to get a lot more order spoofing. Altcoins, you're going to get horrendous order spoofing. There's not actually as much spoofing that goes on with Bitcoin, believe it or not, that actually moves the market. Ty Diamse. So Ty Diamse says, you said more liquidity would slow the rise of Bitcoin, but what are your thoughts on why gold shot up after its ETF? Okay, look back. Yes, historically over a long period of time, gold went on a heck of a tear. But if you go back to like OTC markets that were low liquidity, gold would move high percentages in very short periods of time, just like you see with altcoins. The fact that gold rose significantly over time that's just a bull market. That's a bull market, bro. But on an individual trading session, so for a day-to-day trading session or an intraday session, for example. So if you're a day trader, which I generally don't recommend, but anyways, if you are trading an intraday session, gold moved slower. Gold moved with less volatility than it did previously before the ETF. So anytime you get an increase in anytime you get a significant increase in liquidity, you're going to get a decrease in volatility, which as a trader is what we should be interested in. I haven't started tapping yet, but I'd imagine they are starting to flow pretty good now, eh? Oh, how's the sat running? Right on, right on. Looking forward to some of that maple syrup, man. Don't forget us down here in the States. Anyways, so yeah, we're not going to be able to get that BitMEX data from, this is data.bitcoinity.org, by the way. I saw that request. Looking over at vcdepth.io, the order book within 5% of price is still bullish as well. Give this a nice refresh and see if that's changed at all. That has this still remains bullish. Within 5% of price, there are more individuals trying to buy than trying to sell. Now, going over to kind of my new favorite tool that I've been utilizing, cryptometer.io. Now, I'm not as bullish on this as most people are. I think this is a fantastic tool, but you have to realize that I don't trade based off a lot of price action a lot. I will, but my primary strategy is, and how I enter and exit positions is a strategy that I've built painstakingly and slowly over time. So anyways, cryptometer.io, we're going to go to, we're going to select BitMEX, and we're going to look for XBT. So I want to see what's going on with XBT here, for example. So if we look at the order book on XBT, the overall order book is extremely bullish as well. About 57% of market participants trying to limit buy, about 42% trying to limit sell. Looking at the current order book, we've got about 1 million in the buy side right here, 2.53 million in the sell side right here. So kind of a significant sell wall we're going to have trouble getting over, but not that massive, honestly. Not that massive, honestly. So this is really good, especially with the significant trades rolling in right here. If you guys are looking to counter trade, I mean, obviously a very good strategy is to look for a significant trade and take the trade in the opposite direction, if that is also corresponding with the way the price is moving. We can do a deeper dive on this later if you want, but again, this is just something that I've been looking at for the past couple weeks, actually, since this has been on my radar. So but yeah, so just looking at this in general, generally you do want to buy, regardless of whether it's spoofed or not. There's no way, it's difficult to determine if something's being spoofed. There are metrics and methods to do that, but generally the best method is if you think that an order book's being spoofed, or if you're seeing unnatural activity, is to stay out of the market or risk small amounts of capital. But in general, I mean, just from a trader standpoint, because you can't adopt some wackadoodle strategy for long-term sustainable trading. But in general, you don't want to sell, or you don't want to buy into a market that the order book is not bullish on. You want to see that the majority of market participants are trying to buy. If this was flipped to the downside, it wouldn't be a market that I'd be interested in buying into. But anyways, lower time frame level of what I think is distribution, but we'll see how this breaks. So getting back over to the charts here. BitMEX is derivatives contracts. Yeah, you're absolutely right. It's also a leading indicator for sentiment in the market, which is historically how futures markets are measured. So I want to talk about the CME expiry tomorrow. Now, remember, there's no verifiable data for how the effect on the markets when the CME contracts expire, except the fact that we often do get a volatile movement. Sometimes we go up, though. Sometimes we go down. So I want to look at the last. Actually, sorry. Now we need to switch scenes again. Sorry. I want to look at the last Quandl report. So this is the last commitment of traders report coming in from the CME desk. So we have data from the 19th as the last time the commitment of traders report was updated. We can see that the number of longs to shorts on CME is actually roughly equal, because if we look at, sorry, so this is leveraged funds, longs and shorts. Sorry, I was looking at some other stuff. I want to look at total reportable longs and total non-reportable shorts. So we'll take that off. We can actually see that if we add these values together, we are about equal. We are about overall equal. And we can see that really clearly when we go look at the COT indicator that you guys can pull up on TradingView. But in general, I'm going to keep it on the screen so I can talk about some stuff for a while. Now, I would expect that if we had a significant divergence in the longs to shorts ratios, that the market would move in the opposite direction of the side that we were heavy on. I mean, obviously, the reason being is that for traders to exit a futures position, they would have to market. They would have to enter in the opposite direction. So for a short to exit their position, they would have to buy long. For a long to exit their position, they would have to sell short. Now, an argument could be made that if we look at the breakdown of the way that traders are classified on the CME platform, that we could get some kind of fundamental determination of which way price is going to go. So, for example, traders on the CME platform are clumped into leveraged funds, asset managers, and others. That's actually how this determines them. The more proper terms are institutional traders, professional traders, and retail traders. So, if we pay attention to what leveraged funds are doing, or institutional traders, we can see that they're actually net short. If we actually take these two, so let's actually go over to the COT indicator here, right here. So here's the COT indicator. Now, professional traders or asset managers are going to be denoted here by this grayish line. That is going to be, if the line is moving up, they are putting on more longs or reducing shorts. And the blue line is retail traders. These are smaller positions. And again, if it's moving up, they're putting on longs. If it's moving down, they're putting on shorts. And the black line is corresponding to leveraged funds. These are going to be your institutional investors. And the red and the green represent overall longs to shorts ratios, right? So if we pay attention to what the leveraged funds are doing, or the institutional traders, we can actually see that they're net short between 1,060, 1,080 contracts, depending on if you go off this information or if you actually do the math by hand yourself. That's a lot of contracts to be net short on. Remember, each CME contract is worth 5 Bitcoin apiece. So that's 5,300 to 5,400 Bitcoin worth of net short contracts. And that's the largest pool of traders we have on the CME. That's a lot of contracts to be short on. Conversely, we can see that the smaller pool of traders are net long. That's about $21 million to the short side. Now, and that's significant volume, again, if we're taking the Bitwise report seriously on the reality of the volume in Bitcoin trading. Now, the argument that I was referencing earlier could be made something like this. So institutional traders are mostly hedged in their positions with other assets and positions. We have to understand that institutional traders are about risk management. They're there to crank out, 5 to 6% a year and risk less than the market, for example, or crank out 15 to 16% a year and risk less than what the market would be generally risking. So we're talking about hedge funds. We're talking about prop desks. They're in the business of slow, steady growth. They're in the business of managing multiple portfolios and managing multiple positions, and less in what you would consider, most of the people watching this would consider as a trade setup as a day trader, which is going to be a high risk, high reward type trade setup. That's not the business that they're in. So institutional funds are likely to enter and exit positions gradually and take profits and build up positions over a long period of time. Whereas other smaller pools of traders, so professional traders and retail traders, are likely to enter and exit much more quickly and in larger size relative to their holdings. Now, because funds are net short, if they exited a majority of their short positions, we would expect the market to move fairly quickly. That would be a lot of rocket fuel and liquidity, especially with a spot bullish order book, for example. However, since they are unlikely to do that, and by the way, signs of that would be a very bullish indication that price is going to continue to move up on a consistent bullish basis for a while. But since the other pool of traders are more likely to close their positions, their long positions, their profitable long positions, mind you, especially because those long, again, like I said, those long positions are in profit. We could theorize that the fuel in the tank is actually to the downside currently. Now, this is interesting speculation, and from a fundamental basis, utilizing this information to predict the market is helpful for establishing a fundamental position. Just remember the dangers of using fundamental data, because we enter into the realm of subjectivity. Works great when it works, but if you don't manage your risk, it can have devastating results. Now, so if you guys, to get this indicator, you just type in BTC COT in your indicator pane and you can pull this up. I'm just using the default settings. Bennett made this, so this is pretty helpful. Or you can go over to Quandl and do the math yourself. I'll drop that in the chat, the link to Quandl. And in the Discord, I believe, is the link to the COT indicator. If you guys have trouble finding it, you guys can DM me or ask in the general chat if you want. Let's see here. Oh, yeah, I did kind of want to... oh, I guess that's not really worth talking about, actually, to be quite honest. Let's go over here and get rid of that now. And what I want to look at is... want to look at GBTC and the CME futures. So what's interesting, if we look at the Grayscale Trust here, so if we look at GBTC, and I think somebody pointed this out earlier, the fact that price that GBTC was moving down and CMEs were moving up, or BTC moving up, for example, which is interesting. So we do see that after that pretty significant movement over the 26th to the 28th until now, really, it was a one-day movement over the 26th to the 27th. We did see that GBTC gapped up pretty significantly on the daily open. And we've completely filled that gap right now. But if we look at CME futures, we have not filled that gap at all. So CME and Bitcoin's actual price on spot as well has done conversely to what GBTC is doing. Now, I've known, or I've used GBTC and BTC or the CME futures as leading indicators before. They do tend to work. And Bitcoin futures in particular, as well as GBTC, have a really lovely penchant for filling gaps, and generally fairly quickly. I mean, you can just cursorily go back and see, for example, the last time we gapped up, we did end up moving up for a little bit, but we very, very quickly, so this is on the hourly time frame. So within a couple days, pulled back and completely filled that gap and then some. The CME just has a as opposed to other assets with how quickly they move back towards that, and that's to do with its volatility, has a wonderful penchant for reversing and filling gaps very, very quickly. So anyways, long story short, I'm not really comfortable with entering into a long in this area, regardless of how bullish the order book looks. In fact, I'm still overall midterm bearish on Bitcoin's price. I think we are going to see a retest of 3,500. See here. Zuhair Nakfi, thanks so much for the $5, my friend. He says, wouldn't the majority short on CME indicate that price will move up to liquidate? Also, GBTC rejecting from one-day Kumo resistance. So the majority is not short on CME. Leveraged funds are short, and they're not going to get liquidated. They're not retail traders. Retail traders will get liquidated. Institutional traders will not get liquidated because they have built their position up slowly over time, and a volatile price movement is not going to kick them out of their position. You have to remember that institutional traders are hedged in multiple asset classes with multiple positions, both long and short. So institutional traders are not going to get liquidated. Retail traders are going to get liquidated. And since the majority of retail traders and asset managers are long, and institutional traders are short. So again, the longs to shorts ratios is actually fairly flat. There's really not a divergence at all. They're pretty flat. It's about 50-50 long to shorts overall ratio on the CME futures. But when we look at the different pools of traders on the CME futures, we can see that institutional funds are short, are net short. And they're pretty much naked short, which means they have to be hedged long in other asset classes or have that risk managed in other classes. But retail traders, smaller position size traders, they are all net long. And I think that most traders in general right now are likely long. All right, so we talked about the CME futures. Okay, so I can move on to what I want to talk about next. Got a lot of requests. And buried treasure ACF immune support. Gotta go pick some of that up. Any hoosers. Anyways, so who will be the leader in 5G? I don't know. Verizon? I have no idea. I don't know anything about 5G. So anyways, if we just look in general at the chart, let's start with Tether. Let's start with Tether, guys. There we go. Sorry, it takes a little while to upload. I love how TradingView repaints on me on short-term basis. Anyways, looking at the 8-hour chart, what do we see here from our primary indicators? We see time transformation flirting over. When I see it start to crook like that, it's flirting with wanting to give it cross to the downside right here. It's not going to cross now. It's not going to cross on the daily close. Has the potential to, well, it could close on the daily close if we drop down, I would say, below these previous highs right over here on the market. So anyways, a lot of people are going to look at a pattern like this and say, Bitcoin's price is putting in somewhat of a bull flag, somewhat of a bullish pennant. I don't really see that, guys. It's a possibility that this does have continuation to the downside, but since I don't have a signal to be long right now, since I don't have a reason to be long right now, I'm going to continue to hold my short position open. We're right back at the entry of my short position right now, actually. And it's been flirting with it. Now, I will manage risk if we close the 3-hour candle above my entry position. Overall, that will end up being a break-even trade because I've already taken profit on my, I already took 50% profit on my short trade right now. So my original entry was 40.15 on the XBT price. So if we end up closing a 3-hour candle above 40.15, I'll likely exit I will exit my position. I do have to set a rule, so I will be exiting my position at 40.15. I will not be looking to go long though, still at this point in time. We'll be looking still for opportunities to exit the market based on everything that I've looked at. I still feel that the direction is to the downside currently. Again, I have more conviction that we're going to test 3,500, 3,650 at the very least, before we test 4,500. So now that doesn't mean, now I would be foolish to say that though, and say that I will not be taking any signals to be going long. If I get a good indication to be going long, then I will be going long as a trade. But overall, I'm looking for short setups. So still in a short position right now, hovering right around my entry position right now, and we'll see how it plays out. Going to be a lot of opportunities. I think Bitcoin dominance dropping, and actually, let's go take a look at. I want to go take a look at CoinMarketCap for one of the few helpful things that CoinMarketCap can actually tell us, and that is going to be looking at the stable coins, utilizing the stable coins as a leading indicator. So, Tether 0.39%, individuals taking profit, selling into Tether. Let's go find another stable coin. Hello. USD coin up 0.36%. True USD up 0.45%. So when you see stable coins in profit, so when you see their percentages rising up, that means that individuals are selling cryptocurrencies and buying into stable coins in the short term, right? I'm continuing to see profits being taken and still random altcoins pumping, especially the low sat coins. Again, we talked about the market cycle moving into the low sat coins, guys. This is how the market cycle works. We saw significant pumps from Bitcoin and Ethereum, and then the majors, and then the medium caps pump. That's what's been pumping over the last week, and it's finally ending out now. And you're seeing significant profit being taken on those, as well as you're seeing cuts in those across the board pretty much. And now you're seeing low sat coins start to show signs of movement because that is the natural progression of the altcoin market cycle. So I think there's still going to be lots of opportunities out there for your low sat coins. Moving forward, Bitcoin dominance is still relatively low. The last time I checked, it's still at 50.2. So it's dropped 0.8% over the last week, which is why altcoins have been allowed to go on their tear. When you see Bitcoin dominance start to rise, so this is the way that I see it. When you see stablecoins start to rise, that tells you to be on the lookout to take profits on your positions, or at least book partial profits, as I always say, and set your stop loss at break even. That confirms that your trade is a winner. When you see Bitcoin dominance start to rise, you know that the altcoins are going to take a more extended breather and move back into consolidation. But the thing with altcoins is when they enter into consolidation, they typically give back about 50% of their gains first. So I think there's on altcoins that have broken out, I think there's significant support levels or resistance levels to retest before we can really claim that they're bullish. And again, it's going to depend on every individual coin that we look at. But I think that there's still good medium-term opportunities for them. But I'm tentative and hesitant in the short term, guys. Keep in mind that the main concern of any trader should be protecting your capital. Zuhair Nakvi, no, gotta give me. Thanks for the $2, my good friend. He says, thoughts on the first 2-day bullish TK cross since 2016. Let's go take a look. Hide. And we'll look at the 2-day. I'm going to have to add the 2-day to my chart. The first 2-day bullish TK cross. Again, it's so how do I put this? I always feel like I'm rude, man, but I try not to be. Okay, so my main question is, what was so we had the daily TK cross. So similarly to exponential moving average cross unders when price was falling down below, this was further indication that price was entering into a stronger and stronger bearish trend. So the original TK cross right here, as we've talked about before, if we do get this edge-to-edge trade, then we're pretty confident with that upward profit target, as I've talked about on the higher time frames. That would be the weekly time frame. Actually, this is going to be incorrect. So the weekly is going to be putting us up around 4,500. Okay, so we saw the daily TK bullish crossover back over here. Now let's go back to the beginning of the 2017. This is going to be the tether price. So I'm going to say that occurred there, and that was the beginning of the 2017 bull market. Very good, very good, very good. So that was one of our first indications that price was entering into a bullish trend. Of course, depending on what indicator you used or what average you were using, you could have seen for other indications as well. And you want confirmation as well, especially when we're talking about, oh, shoot. Sorry, guys. Thank you for alerting me to that. All right. Sorry, the little bit of the delay, guys. So you guys must be on a little bit of delay. All right. All right, what time is it? Oh, it's 1 o'clock, guys. Let me go grab some coffee. When I get back, we're going to talk a little bit more on this Ichimoku. I want to get down into a few more technicals on Bitcoin as well. And then we're going to look at some altcoins, guys. So don't go anywhere. Keep that seat warm. Go grab some coffee, guys. We will be right back. Thanks for holding in there, guys. Went and got me some coffee, guys. All right. I went and took some more echinacea, vitamin C, and zinc as well. I'm going to have to go down to the corner store and see if they sell that. I'm probably going to have to order that offline, though. That sounds like something I'm not going to find at my local 7-Eleven, man. The buried treasure ACF immune support. So by the time it gets here, I'll probably be right as rain, honestly. Anyways, so let's talk about this. Let's talk about the daily TK cross, and then we'll talk about the 2-day TK cross, right? Because the 2-day TK cross is pretty fresh, okay? So let's look at what happened on the candle So what candle confirmed the bullish TK cross? That would have been this candle right here. So we can see, and this is something that I've talked about with exponential moving average crossovers as well. If you were following the strategy of buying on confirmed TK crossovers, you would have had a bullish TK crossover. So let me make sure this is right. Yeah, so on this candle right here, the Tenkan San was at $3694.79, and the Kijun San was at $37.09. So the Tenkan was below the Kijun. On this candle right here, so the local top of the market, when price closed at 41.17, that was the first candle that confirmed the bullish crossover. Okay, that was the first candle that confirmed the bullish crossover. Now, TK strategy that you're going to learn on Investopedia, well, I don't even know if they teach Ichimoku on Investopedia, but would have had you buy on this candle. The exact same candle, which if you guys remember, was the candle that I went short on at 41.14. So that would not have been a winning trade. That would have immediately put you at about 9% drawdown, and I'm sure any trader would have probably taken a loss on that. Again, if you bought the absolute top of the market and you woke up the next morning to this, you probably would have asked somebody to punch you in the face. So we can see that blindly taking the TK cross would not have been a good trade. Now, what would have been a decent trade? Waiting for the close of this candle, waiting for the retest of the Tenkan to go long. So basically, we're talking about reversion to the mean strategy, right? So a pretty good strategy in general, even though people are gonna badmouth it, but a decent strategy is going to be reversion to the mean. So when price gets so far above a moving average or the Tenkan San or the Kijun San or whatever average that you want to work with, the Tenkan and the Kijun are differentiated from a moving average in the fact that they're using the Donchian algorithm. So for example, they're using the difference between the high and the low over a period of time, or the average price of the high and the low, whereas the moving average is taking the average of the closing price or open price, whatever you're setting your source to. Moving averages set to HLC3 are very interesting, by the way. Go check that out. That's a pro tip nugget. Any hoosers. So we can see that, and this is something that I've talked about a lot. When you get a bullish cross on the TK, or when you get a bullish cross on an exponential moving average or a simple moving average or whatever, when you get a cross line, or if you're using like the SSL, pretty good indicator by there. If you guys have not checked out the SSL indicator, go check that out. Anyways, we can see that buying the TK cross on the candle that confirms it is generally not a good strategy. Generally a good strategy, and I went over this again. I posted this in the members lounge with golden crosses and death crosses, right? So the 50 and the 50 and the 200 simple on the daily time frame generally gets you wrecked if you buy on the candle that confirms the golden cross. This is a reason that I was everybody was talking about the golden cross that occurred like over here. And again, I don't use simple moving averages, so I was just, I looked at the technical analysis that was coming out. I looked at it, and we just had a golden cross. Probably a good time to go short. Why? Because the market will often revert to the mean on a bullish indication like that. Because that's another one of those like fundamental things that's going to put a lot of the market on the same side. That's going to put, because people are trained that, hey, a golden cross is bullish, and it is in the long term. It is in the midterm, not in the short term. Generally, short term, you generally get a reversion to the mean, and often that's just more sinisterly how this market tends to move. So waiting for the retest of the Tenkan would have been an amazing strategy, and you'd be in a comfortable long from around this area right now. Now you could have waited until the retest, and then as you can see on the retest, price actually closes below the Tenkan and the Kijun, actually closes below the cloud, actually giving you traditionally a bearish sell signal when price closes below the Kijun or below the Kumo cloud. Then you could have waited though for price to reclaim the Tenkan San, which it did on this candle. Again, probably a loser, honestly, because you would have incurred probably about 4.11% drawdown. So again, that's probably another losing trade. But in general, if you had entered long around here, you would be in a comfortable position. Now, keep in mind the words that I just used. I just pointed out two situations where you would have probably gotten wrecked using that directly. And so it's probably rare that you actually could have taken this crossover signal to the long side and been profitable on it. Now again, if you waited for the retest and you entered here, then cool, you'd probably be in a comfortable long position now. But what's the odds? If you had done that, then you're not following Ichimoku's strategy. Or if you are, you're following some strategy that I've never heard of, which is fine. I encourage you guys to develop your own strategies around these really powerful indicators, which Ichimoku is a powerful indicator. But yeah, so buying on the confirmed TK cross to the upside, not a good trade. Buying on the retest and then reclamation, which is the better strategy, probably most likely got you kicked out of your position as well. Now, maybe not. Maybe you held on. But again, you're reclaiming the Tenkan-san. You have a bullish cross. You're back inside the cloud. You're looking for that edge-to-edge trade. And then price closes below the Kijun here. By any metric, by any Ichimoku strategy, you're exiting your position at a loss at that point in time. But I digress. But anyways, yes, going long in hindsight from here was a good trade. But I don't see how the Ichimoku following the strategy would have kept you into that. Now, it was a good fundamental indication, the bullish crossover, the TK bullish crossover on the daily. It was a good bullish indication that price in the midterm was going to continue to accelerate. But as for a tradable signal, was pretty booty. Now, let's go to the 2-day. So we had a confirmed TK cross here, right here on the 2-day, pretty much right at the local top of the market. And we immediately had a pullback, right? We immediately had a pullback. So we got that confirmation right here on the close of this candle. And if you had gone long, you would have had about 2.38% drawdown. Now, I don't know, obviously, if you're trading the 2-day chart, most likely your stop loss is wider than that. If we look at the 2-day Kijun, man, it's still pointing down. Now it's starting to like list, it's starting to turn, man, but it's going to take more bullish price action for this to turn better. Let's see. How well has the Tenkan-san done at spotting our lows and our highs? In a trending market, it calls the bottom really well. Once price entered into this chop for the majority of 2018, the 2-day Tenkan-san seems pretty useless here, honestly. Price doesn't really seem to respect it any way, shape, form, or the other. The Kijun, the general area of the Kijun didn't do that much better. You know, price didn't hit it here, faked you out here, respected it here. Respected it here as well. Excuse me. Price didn't really care about the 2-day Kijun here. Didn't get any kind of rejection from it. Nowhere close to retesting it here. You can make an argument that the Tenkan was holding 2-day closing basis well here, and it's currently holding it here. But that doesn't really make up for this, and that doesn't really make up for this. So I always try to look at things through the lens of tradable strategy. So the daily TK cross sets you up for a longer term, good setup. But following it directly, we just pointed out, was a little sticky, a little tricky. 2-day as well, following the direct crossover would have put you in for immediate drawdown, and you'd be pretty much back at break even right now. But again, this was a better situation where on the cross, you wait for the retest to go long. So entering anywhere around here, you actually had 4 days or multiple opportunities to attempt to buy that up. You had one opportunity here and one opportunity here to enter long, and you would be comfortably long right now. You'd be comfortably long right now. Most likely looking to book profits. So what would be... Let's say let's just make an argument that you would enter it on the retest of this candle. 4092. So 4092, or if you're being very bullish, if you entered in this, you're looking at 4194. So 4092 to 4200. So 4100 to 4200, let's just cut the baby right there, is the area that you're looking to retest, which is kind of what I've seen with everything else. I see a lot of people calling for pretty much an immediate retest to 4200, which fundamentally isn't off the table, I wouldn't say. But I'm not really comfortable with that kind of wishy-washy analysis that I'm kind of hearing everybody else say, where people are saying, oh, we're going to see a move to 4,200 for a terminal shake out of the longs, and then price is going to move to the downside. I think that's pretty wishy-washy, dude. Again, I don't have a problem with saying that I'm still short, so I'm looking for areas to short the market. And I actually don't feel like right now is a bad entry position. Again, I'm still short from 4015, so we'll see. Again, I've already booked 50% profits, so you can see the I'm at about probably, I'd say 50% conviction on that short. But again, I haven't gotten an indication to go long yet, so I have to remain in my original position and manage risk appropriately. So what I would say what I would say is that this is probably good news. This is most likely a good indication that in the midterm, price is going to continue to appreciate. But I still think we're going to get a significant retest and shakeout. I just said I hate that wordage, but again, it is technically correct. I think that we are going to see a shakeout of longs. I just don't feel that we've put in, and again, we're talking about feelings. So I'll take the signal. I'll take the long signal when I get the long signal, guys. But just in general, talking about analysis, I don't feel that we've had enough accumulation to make a significant up thrust above resistance, guys. And if we take it back, if we just keep it really, really simple. So let's take Ichimoku off. And let's just look at my horizontal support and resistance. If we just keep it really simple, guys, still underneath resistance. Underneath resistance. This proximity to resistance, I look for opportunities to short the market because this area has thrust us down every single time. So I will be a buyer when we have confirmation that this level is broke and things still look really bullish in the order books. Then I'll be pretty gosh darn optimistic, at least up until our first sticky point around 4,500. Until then, guys, following the strategy, looking to short the market. Take it old school, hand draw those forks, man. Raw, freshly, non-irritated squeezed almond milk, the bomb in my humble opinion. Store-bought fortified with rocks, not so much. Right on, Vitam. You know, I just drink my coffee black. I try to stay away from a lot of dairy. I'm pretty much keto, but when I used to strength train, well, I still do strength train, but when I used to be really concerned with bodybuilding, when I really wasn't interested with putting on mass, which hasn't been for about almost 2 years now, but there for a long time when I put on a lot of my muscle. I mean, I ate yogurt all day long and drank whole milk all day long, and yeah. Gonna have to dig for that buried treasure. Raziel says, I find using trend signals such as moving average TK crosses not to be effective when we're in a sideways trading range. So that's the point of having indicators or other methods of you're right. You are absolutely correct. So here's the thing. Trend following strategy it can be very profitable, especially when price enters into a strong trend. Now, the strength of a trend following strategy is that we never know if price is going to enter into a strong trend. We just never know. Now, you know, obviously strong trend can be relative because you can look at these movements here, strong trend to the downside, strong trend up. So, you know, very powerful movements, especially if you're able to capture the meat of a movement. Now, if you are using a trend following strategy, you're going to need qualifying indicators to help you know when and when not to take a strategy. Because basically, so with a reversal strategy, which is the strategy that I typically employ, again, I'm a reversal trader, doesn't mean I won't take trend following indications if time transformation doesn't give me one or my strategy doesn't give me one. But in general, I look for opportunities to counter trade the market. Because I think that's the best way to trade cryptocurrencies at this point. Well, at least especially Bitcoin and Ethereum on the perpetual swaps, which is the majority of where I do my work at. The problem with trend following indications, the reason that you're going to need confirmation indicators such as volume and volatility, which is, you know, something that I'm at, you know, that I'd be remiss if I didn't continue to point out over and over and over again, is you need indicators that tell you when not to take a trade. So if there's not enough volume behind the trade, if there's not enough momentum behind the trade, you don't want to be entering into a long position or a short position based off of a trend following strategy because you can get chewed up in a ranging market and your P&L. And that's the main problem. I think that's why so many people don't like trending indicators, even though they are quite powerful. And trend following strategies can be profitable. But the problem is that most people don't put the time and the grind in to find a good way to optimize that strategy. And they end up getting chewed up in a ranging market, which of course you're going to. That's why you need qualifying indicators to tell you when to stay out of a trade. So the main issue with reversal trading, the main issue is it's always risk management, right? The main thing with reversal trading is waiting for that actual correct time to enter into the trade, to counter trade sentiment. When the technical indications line up just right and you get that good confirmation. That's the main issue with reversal trading. With trend trading, the main issue is damage control. The main issue with trend trading is that you're going to need indications on your chart to tell you when not to take a trade, because staying out of those whipsaw trades is what's going to make a trend trading strategy profitable over the long term. That's a lot. That's a lot. On Twitch, I'm just going to say the last, S50. What's going on, dude? Do I study Elliott Wave? No. Also, funding rates are spiking on Bitfinex. People are lending to margin long. Interesting indication. That would confirm my, that would lead fuel to my bearish bias. If we're getting an increase in buying, late stage buying, at a late period in the trend, close to resistance, that's good. That's good for me. But no, I don't study Elliott Wave because it doesn't work. It's very simple. Justin has some characteristics of an idiot savant. Yes, the idiot part, man. Breaking news! Netflix, Airbnb now accepting Bitcoin in Sweden. Okay, got overexcited. It's using bit refill, so not that. I love you too, Dan. A little bit of, you know, I mean, listen, there are going to be your, I mean, one of the reasons that I tell people to start to create an if this then that strategy is because most people are not going to have, because most people have the ability to profit in the market, man. They just get taught terrible strategies. They just get taught terrible strategies, in my humble opinion. And if most people were to just start with and create a very powerful if this then that strategy, they're going to have a strong foundation to build off of. But again, you need to put in the time and the grind to develop that primary strategy for yourself. I mean, it took me a long time to develop time transformation. It took me a long time to find things like Wada Atar. And, you know, to make things like Quadrigo ATR and to feel comfortable and confident in the indications that these things give me, as well as my to trust the indications that these things give me and to know that they're profitable in the long run, to take them and trust them, and to manage my risk appropriately and to close the chart and focus on other things, other aspects, such as teaching other people how to trade. I had that strong foundation to build off of, so now I can look at more advanced things like price action and volume, for example. Zero Cool says 4K looks like the inverse of 6K price action. Correct, with the only difference in time. So look at how much time, because again, you could have made that, this is something that I've kind of wanted to talk about for a while. You could have made that argument here, right? You could have made that argument here. Like, so if we just like start drawing, like, I don't know, if we just start drawing these like trend lines, this isn't going to be like 100% accurate, but just bear with me, right? Bear with me. You could have made, because I saw that argument here. I saw people like, oh, the descending triangle, Bitcoin's breaking down right here. It didn't happen. You could have made that argument here. Bitcoin's breaking down right here. Bitcoin's breaking down right here. You could have made that argument. And then it finally did break down right here whenever it was going to break down. The issue, here's the issue, is that look how long that took. Look how long that took to distribute, to break down to the lower range right now. It took, after that initial test of support there, it took 280 days to distribute enough. So after a almost, since December 2017, after almost 18-month bear market, guys, I just don't think that after the initial test of resistance here, let's just say that established resistance, I don't think that 117 days is quite enough time. Generally, it takes you significantly longer to accumulate before the next bull run. We'll see. What do I do about the high fees on BitMEX? Obviously you want to look for as many opportunities to limit enter as much as possible. If I'm entering into high volatility, which is always risky, typically I am market entering into the market. But I always look to exit on limit orders. So that really helps. That kind of helps break even. And again, I mean, don't overtrade. Don't overtrade. So I trade higher time frames generally. I'm generally looking to capture fairly significant movements in the market. I'm not overly concerned with intraday trading because that's going to chew up your account balance, and unless you have a really razor sharp, really tight method and strategy, is going to get you chewed up, man. And again, kind of the issue with recommending day trades is that, you know, there's going to be a divergence in when people are watching, when people can get a signal, when people can get an indication. And so it doesn't really it doesn't make a whole lot of sense to me that I can post, you know, hey guys, I'm entering in this and I'm out of the position here in 30 minutes. I can do that. I lived in the 5 and the 15-minute chart for 2 years. But it's taken me a while to realize that you just get better trades, you just get stronger indications, and you pay less to the exchanges if you focus on higher time frames. And that's not to say that you shouldn't take into account the lower time frames, because those will often give you good entries when you're looking at volatile movements on lower time frames. But I wouldn't trade lower time frames, honestly, in my humble opinion. People get really obsessed with scalping the crypto markets, and it's one of those few markets where you can scalp it profitably. And if you're out there doing that, hurrah, hooray, huzzah! We do that sometimes in the premium trading group. But I think there's more profit to be made on finding that longer term trend and taking that longer term position. Okay, so let's jump into some, what is it, 130? Bitcoin did put in several bear traps before breaking 6,000. What could you have done to discern a genuine breakdown from the fake outs besides Wadatar and high volume? We've talked about this a lot. I think probably your primary indication would have been this is, you know, this is probably, I should make a video about this because this is probably more properly, this is a long topic that we can dive into. What were the signs, I guess, subjective or unsubjective, that you should have been in a short position on Bitcoin as opposed to a long position off the retest of 6K? A lot of things. Volatility, almost every technical indication, the longs to shorts ratios, just about everything was screaming to go short. So, which we were. You guys go back to the original videos from that point in time. Bensovich Drazen, you are way behind, bro. You need to catch up to where we are. Pablo says, but trading Forex, you use a longer time frame as well. I don't. So I'm not actively trading Forex right now. I've had a lot of requests to do it. I did set up an account on Awanda. I did reset up an account on Awanda. Awanda's the broker that I use, that I recommend using. I used to trade on FXCM, but that was before the Swissy crash, and they got bought out by Forex.com right now, and I will not trade on Forex.com. So Awanda's probably your best bet out there, especially if you're in the United States. Anyway, so I've made one. I set up an account on Awanda. I've made one trade so far. That was the Euro Pound, and I made about 103 pips my first trade. I trade with Forex. I do not trade small time frames. With Forex, I trade the daily time frame. Completely technical approach to trading Forex. I do not look at fundamentals for Forex. So, Zuhair, I'm going to make a note on that, and maybe I'll make a recorded video on that. Like, what were the indications to be going short? Longboard riders. All right, so let's start cracking down some of these requests, guys. Let me go over here to the editor. Let me take a brief pause for the cause and give a shout out to our supporters. I want to thank, hold on a second here. New York Life, 1845, and I think that's lightness 50. I think that's right. Lightness 50. Guys, thanks for the follow on Twitch. I highly appreciate that, guys. I want to thank John Stanford. Thank you so much for the subscription on YouTube. Now, I know that something's like a little off because I'm not getting the correct indications from YouTube. On recent activity. Like, I know that I've been missing subscriptions and stuff, guys, so I apologize for that. I think one thing that I might do is I might go ahead and open up, and I'll be able to do this with the new computer. So I can have, I think Stream Labels is better for showing me recent activity rather than what Streamlabs, because Streamlabs was working amazingly well. But I've noticed that, like, when I watch the chat, when I watch the stream, you know, things will pop up in the pop-up section like, hey, you got a sub or whatever. And I want to give you guys shout outs because I appreciate the support, guys. Excuse me. But it's not popping up in my recent events in Streamlabs OBS. So Pablo says, would I recommend avoiding trading the British pound because of the Brexit right now? No, hell no. I don't trade fundamentals, man. I mean, if you want to be what I would say is that if you are trading the British pound right now, you need to take movements to protect yourself if you are in a position. But you still you take the positions that your strategy gives you, because the British pound, the movement can work out tremendously in your favor if you're on the right side of the market. And if you're managing risk appropriately, any one individual trade should the market move against you is not going to significantly affect your account balance. So take the trades that your strategy gives you. With Forex. I don't do anything. Okay, so if this show was called Cracking Forex, we wouldn't look at volume, we wouldn't look at price action, we wouldn't look at anything. We would just look at technical indicators. That is the best way to trade the Forex market, in my humble opinion, and to use the higher time frames. No intraday trading on Forex. I think that stuff is you're stepping over literally in Forex because of the liquidity. You are stepping over dollars to pick up pennies. If you're, I think, in my humble opinion, if you're day trading the Forex chart, and that's from having, I day traded the Forex chart for 2 years, and then I found a much better strategy. Yeah, no shit, blockchain. I feel you, man. All right. Okay, so let me get over to the schedule. Okay, well, let's glance briefly at Ethereum. I mean, as always, guys, take everything that I just said about Ethereum and take everything that I just said about Bitcoin and apply it to Ethereum, but with a little bit more volatility. So we can actually see. So what was the indication to be going long on this last pump? So the 8-hour Ethereum on the 8-hour did give us the buy signal on both the BitMEX chart and on both the tether pairing and the BitMEX chart. And as you guys will recall, I ignored the signal. Should not have ignored the signal. I should have taken the indication that my strategy gave me and used that to exit my position for my Ethereum short. As a result, I ended up only taking about 20% profit on that at the lows and exiting the position at break even. Now, in a new position on it as well to the downside, but again, I could have, if I would have just, this is one of those rare opportunities where you're going to see me. No, that's not true. I'm not trying to build myself up here. I mean, this was just a trade that I missed. And that's going to happen. I was a little bit, I guess I was just a little bit too confident in my short position at that point in time. But again, you can see the pain of ignoring the strategy that I've built over years. And again, even after having done this for a very, very long time, I make mistakes too. So it wasn't a mistake that cost me anything due to a money management strategy that I will not deter from. And that's why your psychology and your money management are more important than your entry and exit system. I mean, your entry and exit system is a distant third when it comes to money management and psychology. So anyways, yeah, we got that indication live on the stream. Actually, I remember that because that was the 11 o'clock daily candle close, or that candle opened at 11 o'clock. This was the morning candle close. So this was the daily candle close on the 26th of March. So that was a leading indicator for the entire market on that 8-hour buy signal for Ethereum, and everything really pumped up based upon that. Trunker, when it comes to leverage on Forex, I would recommend, no, I don't. I would recommend that you set your leverage at 20x and then never adjust your leverage ever again. It's my personal opinion. But no, I don't look at any. I don't look at getting back to Forex briefly. I don't look at any fundamentals in Forex. I mean big banks and institutional funds move the Forex market whenever they want to. It is the most manipulated. Asset class out there. So you have to learn. You just can't look at any of that stuff. Non-farm payrolls. News events, it's exhausting, dude. Like, you can profitably trade the Forex market. Like, I profitably traded the Forex market on the daily time frame, on the higher time frames, and pick up an average of anywhere from, I mean, again, this stuff's stupid. This is going to be like your typical like bullshit, but really realistically, on average, picking up the daily ATR number of pips for my first take profit target, and then typically getting anywhere from 80 to 100. Back when volatility was higher, back during, I would say back in 2014, 2015, when the last 2 full years that I traded Forex, we would always shoot for 100 pips on the daily. We would generally shoot for an ultimate for a minimum target of 100 pips on the daily time frame, and shoot, try to catch larger trends, and get, it doesn't matter. You can't put a scale on it, because sometimes we catch strong trends and sometimes we wouldn't. But generally shooting for 100 pips. Volatility's dried up a little bit now. I would probably, and again, it depends on the asset class that you're trading, but probably looking for about 60 to 80 in general. And don't trade the euro dollar. Never trade the euro dollar. It's the worst pair to trade ever. Where's the best place to get the latest news about an altcoin? I am always too late to get in during the pump. You're always going to be too late to get in during the pump if you're looking for news. You need to have some sort of technical indications to alert you that a trade is going to be profitable before the news comes out. Because by the time the news comes out, the coin's already halfway there. But that's not to say that sometimes you cannot catch good trades utilizing news, but I just think it's exhausting. It's the same thing with Forex, dude. There's so much news coming out. There's so many coins. There's so many ways that price could react to news, whether bullishly or bearishly, that I think it's a waste of time overall to look at fundamentals like news. But crypto panic. Crypto panic is going to be your best bet. Let me showcase that real quick. This is the news aggregator that I like to use. I think it's really, really, really good. Where the heck are you? CryptoPanic.com. Create an account. You can get price alerts. You've got all your news right here. You can react to it. It's pretty good. This is pretty good, man. But 500x on Javek. Sorry, Trunker, that probably was like a pretty abrupt answer. No, I just think that thinking about leverage, I think 20x is the perfect amount of leverage to use on Forex. If you trade the way I trade on Forex, that's if you're comfortable with having your entire capital on deposit in Forex. If you want to like spread your money around different accounts, then probably you could set it to 50x if you wanted to keep half of your amount on there. If you wanted to keep half of your deposit on account. But I wouldn't go over that. I would not go over that. But 20x leverage is typically what I feel comfortable trading. I would set my leverage at 20, and then I wouldn't touch it. Wouldn't change it. Would I recommend using a trailing stop? Yeah, this is something that I went over in the premium webinar last night. When to use a trailing stop and when not to use a trailing stop loss. And again, if you guys are subscribers to the premium trading group, I'm going to be uploading that right after the show, which is getting closer and closer. So let's actually get back over here to the charts and see if we can't take some of these requests, guys. My apologies, with a quick dip to look at the S&P 500. We're just going to look at the index. All right, and we're going to look at the weekly. All right, so the weekly struggling to get back above that resistance level. So looking at the weekly timeframes, we can see the same thing that we were talking about for a while. Liquidity grab to the upside, pretty bearish candle, moving us down below our critical level of resistance here, and now we're looking for an SR flip. I think that, again, I'm still bearish on the market in general. I'm going to need to see a confirmed week. I have to see another weekly close now that we've gotten faked out from this level to reclaim this level. But I think we have more downside. Again, I'd be very happy if we get that nice pullback to 2,600. I'd be pretty bullish for higher price movements on a confirmed retest of 2,600. Then we can move higher. Until then, I'm gonna remain bearish, looking at the weekly here on the S&P 500. Bitcoin Boogie. Hey, Justin. Hope you're having a great day. What programs or website do you use for Forex trading? TradingView. That's it. You guys can see. Maybe you guys can't see, but I have the. You can trade a Wanda directly through TradingView. I have tried to use MetaTrader 4. It's a dinosaur. I fucking hate that thing. I apologize for my French. I cannot stand MetaTrader 4. If you guys like MetaTrader 4, power to you, man. It's pretty powerful, dude. Also keep in mind that when you're using MetaTrader 4, you have to trade in lot sizes. So it's different from, actual units of a contract or units of an underlying asset. So I'm just very, very comfortable trading directly through TradingView. Otherwise, I'd probably be using Awanda's web platform or their downloadable little platform that you can use. But since you can plug in directly through TradingView, all you got to do is right click your screen. And you'd see trade if I had, trade right here. Sell, buy, boom, create new order, trading settings, super easy. Super easy. And that's it, man. I don't look at, again, when it comes to Forex, I don't look at news. I don't look at fundamentals. I don't look at anything, blah, 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 blah. I look at technicals. So I only need my chart. My chart and 30 minutes a day is all I ever needed to trade Forex. After I spent 2 years. I mean, don't get me wrong, like I did pretty good on the lower time frames, but I just realized that I could make more money and spend way less time. Do I use the built-in scanner on TradingView? Nope. I've got a list of currency pairs that I like to trade. Pretty much all the major currency pairs and all deviations of them. And I just go through them. I look at them all once a day, and if I want to trade it, I trade it. If I don't, I don't. I don't use scanners dude, the way I trade Forex is super simple, dude. And I would argue, because it only takes me like literally like a minute to look at, less actually, because, like I've got a watch list like you see right here. And I just like, here's an example right now that I'm getting back into, I'll just, look, do I want to trade it? Nope. Do I want to trade it? Yes. Do I want to trade it? No. Do I want to trade it? Yes. 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 Do I want to trade it? No. See what I mean? And then I'll just take the pair that gives me the best setup with my risk to reward settings, with my stop and target system. Dollar Aussie looks really, really good, man. Let's look at that Euro Pound. Euro Pound looks pretty good too. Yeah. Kiwi Dollar. Kiwi Dollar looks pretty good for continuation to the downside, actually. Yep. Bull trap. Bam! Any Hoosers. Requests. I didn't get to go over any of the news that I wanted to go over. We're going to look at... Hey, Todd, man, that's amazing to hear, bro. Hit me up, man. I'll be happy to get you onboarded, man. Let's see here. I lost my train of thought. EOS. EOS. Okay, by popular demand, we will look at EOS. Okay, so let's look at... I think we can actually close this because that was experimental. We can close... That's my testing window. So we will look at... Sorry, guys. Let me just make sure. Yep, okay, I'm in the right thing. EOS... EOS BTC. All right, so bullish weekly candle here on EOS BTC. Looking here on Binance, coming right back up to that previous range high. Whenever I see a pretty big spike like this, you guys, you like to counter trade it, up 17% this week. Typically, the market cannot sustain that level of buying. Doesn't mean it can't, but typically the market cannot sustain that level of buying. We're going to go over here to Crypto Meter. Looking at BTC, we can see that really things have leveled off here. So somebody significantly pulled a buy wall out from BTC because this was 58%. Now we're at about even on our buys and sells. In fact, we're getting more bearish as we move on here. So look at that. We just flipped completely bearish. 60% to the sell side. Those are limit orders. So, and if we look here, do we see any significant movements? 1845, 1645. 1845 was a lot of buying. So yeah, actually that's pretty interesting. So if we go here and look at the minute chart, 1845 would be right here. And there was a pretty significant amount of buying right here in an uptrend, which typically the market cannot sustain that. Yeah, so where was that? Right here. I guess not that much. 77 Bitcoin worth, 311,000. It's really not that much. We're looking for like really big moves. That's just short-term bearish. We're looking for those massive multi-million-dollar moves. Sorry, so we want to look at EOS on Binance. EOS Bitcoin. Thank you, Google. All right, so EOS Bitcoin, about 60% of the order book is bearish currently. Let's see here. In the last hour and all time frames, we've had a majority of selling. Again, we get this nice, this is the last 60 days of volume. We can see accumulation level volume right here where volume is fairly low. And then we get this nice upsurge in buying volume right here. Again, typically the market cannot sustain that much buying. That's pretty indicative of something like a fairly volatile, again, this is what we see in crypto all the time, man. A fairly volatile moving up with a fairly sharp retracement. Do we see anything significant here in significant trades? Today, we had about 48 Bitcoin worth of buying at 1455. So right here. $14.55, had some significant buying there, did lead to a pretty much immediate move down, and then forming our local top here, less than 1% above price, which we're currently underneath here. So I would actually be inclined, and again, for those of you who are in the premium trading group, you guys know that we have a setup on this, but I would be looking at the 3-day as well. Just again, looking as we approach this level of resistance. We put in this little bit of a baby bitch bull flag. Not really, not even really a bull flag, just a level of consolidation that we've happened to have broken to the upside on. I do look at this as an opportunity to take this to the other side. Again, we have those futures contracts expiring tomorrow, so I'm seeing the increase of volatility. And one thing that I've speculated about is that you are seeing positions close on H19 and move into M19. You always kind of see that late stage buying, and it's nothing that you want to get super jazzed up about or indicative. Let me look at so according to Matt, thank you for sending me to this, Matt. He says this is the reason that EOS went, what was the word he uses? Stupid. This is why EOS went stupid. EOS Finex, introducing the first fully on-chain and scalable exchange ecosystem on EOS. After a year of challenges and extensive development, we are excited to unveil the EOS Finex beta. As a beta test, the platform is initially opened up as a paper trading environment, providing our users with a chance to experiment with the EOS Finex platform and potentially viable trading strategies in a simulated environment whilst earning rewards through providing platform feedback. Developed by the Bitfinex team, EOS Finex combines the scalability and speed of EOS with Bitfinex's industry-renowned expertise to deliver a fast, transparent, and secure platform for digital asset trading. So I'm going to have to do a little bit more looking into that. Are they going to use EOS as their currency coin? So for example, for BNB, if that is the case, then that could be pretty good for EOS. From a technical perspective, I have to be patient and wait and look for signs that I'm not going to get hit in the face if we do go long on EOS. So even if it is fundamentally bullish right now, you're going to need a shovel to try and convince me that buying here at the top of a market cycle is a good buy. If we are fundamentally bullish, there's plenty of time for us to wait and enter into a stronger position if you're looking at EOS for a trade. Because in the short term, again, the technicals don't look amazing for continued bullish movement right now. And again, why would you buy? Why would you buy after an 11% pump? Pleb move, bro. Gotta pull up all the stuff here. Zero cool. What? Oh, I think you're talking about, that was cryptometer.io. Let me drop it into Twitch chat, man. It will now become Third Eye Trader. Justin, you mentioned Palladium the other day. Could you tell us more, please? We're not there yet, man. We're coming up on a pivotal moment in Palladium trading, I believe. But not yet. Let's see here. Light side. Light, I think that's your name, man. Hopefully that's your name. S50 on Twitch says, if I am net short on BitMEX, I am still stuck with funding. Yes, correct. Zero Cool 721 says, not saying bull run, but there's a lot of air above 4.1 thousand from the late November weekly block. Correct. Yes, absolutely. Of course, I'd rather see 3.5 thousand first, but there's only so many times it can hold resistance. Correct, man. The more times that you tap resistance, the weaker it does get. Excellent points, man. Jake Rezio says, overall, are you invested in several different non-correlated assets? Yeah, I broadly, so I have a problem with that. And I'm going to say, so the answer is yes. But the true answer is that doesn't really exist. That does exist from the perspective of hedge funds and institutions managing their risk. But the reality of the situation is that every asset is correlated to the markets. The only ones that broadly isn't is Forex, because it was designed to be recession proof. But you still see fun, just go back and look at 2008, 2009, and look at the Forex markets then. Pretty much most of the markets tend to move in tandem overall. That doesn't mean that you can't find non-correlated assets within that and do advanced methods of risk management and investing. That's going to be difficult for your retail investors. It's going to be more difficult the more retail that you are, man. JF Airplane says, fundamentals are more fun versus others. The majority, they don't care. They enter based on technicals. No, I think you're actually wrong, man. I think the majority of individuals look at fundamentals. So that's why I only look at technicals. Why? Because technicals are not subjective. And as a trader, I'm worried about a strategy that's not subjective. I have a lot of fun doing what I do, man. But when it comes down to it, I'd rather make money with my job and have fun at night with my family. So, having a nice technical setup, I just look at my chart. If it tells me to trade, I trade. I don't really care what the news says. So, reading the news is going to have you, oh man, Vietnam just launched their first cryptocurrency exchange. Is price going to move up or move down based on this? Nah, man. I'm good on all that. Hey, what's going on? My wife doesn't believe in me. Good to see you. Man, it's about, look, guys, it's 2 o'clock. I didn't get time to really look at any requests, dude. I'm sorry, but I got to go. I got stuff to do, man. Well, we had a good show, guys. We had a lot of fun. We laughed. We cried. We laughed. We cried. We talked about, go short on EOS, all this good stuff, guys. So anyways, thank you guys so much for joining me for another afternoon edition of Breaking Bitcoin Market Update. There will not be a show tomorrow because I will be traveling. If everything works out as planned, potentially we will do an evening show from Scott's shop with the new streaming computer, but no promises because that is looking less likely as things go on. Again, if you guys, for the premium subscribers, I'm going to be updating you guys as I'm traveling. Doing my best, but mostly, as you guys know, who are in the premium trading group, we've set up longer term positions on the M19 contracts, and we're looking to manage those positions moving forward. We're going to be we are, as always, going to be taking advantage of the weekend volatility and with our altcoin sessions on Binance, but mostly not a lot of significant changes to our positions. And again, you guys know this who are in the group because you have access to the Signal channel. So, enjoy the nice weather, bro. See you this weekend, man. Hell yeah, dude. If you guys, so let me think. Any other updates? So no evening show. Not this Sunday, but next Sunday, we're going to be having Gabe from X42. So from the development team of X42 Protocol Coin, we're going to have them on to discuss X42 and what it does and why we like it so much. So proud partner of the show, X42, guys. So go check them out. X42.tech. I will try to be safe on my journey. I'll keep you guys updated as best as I can, but we will definitely be doing some weekend shows from the Chicago area, just giving you guys our updates on the market. If you guys have any questions, thoughts, comments, sarcastic remarks, and or death threats, please leave them in the comment section down below. Now, I know you can't leave a comment right now, but if you just wait a few moments and wait for the video to process, just a couple minutes after I hit that end stream button, guys, you can leave a comment. Now, one thing that we always do is we like to flip on over here and let's go to youtube.com and tip some crypto to our random YouTube commenter from the last show, guys. Cracking cryptocurrency. Streamed 2 days ago, so this would be this one right here. Boom. And we're going to go to randomcommentpicker.com. Load comments and pick the winner. George Randla, what's going on? No question of the day. Well, there's not always one, but we just keep hammering away, man. George Randla, thank you so much for the support, man. If you are watching the show or if you're watching this later, DM me in the Discord or ping me in the general channel and I will tip you some crypto, man. Thank you so much for your support, as always. And we will do a question of the day today. We will do a question of the day today. Guys, I want you guys to go check out cryptometer.io. Play around with it. Let me know if you find any bugs, if you find any tweaks, if you find ways that it works well for you, if you find ways that it doesn't work well for you. How do you use it? I think there's a lot of exciting, interesting information on here. A lot of good ways to use this. So I'm going to be talking about this a little bit more. Let's see here. Oh, what was I saying? Shoot. Yeah, go to cryptometer.io and play around with it. Check it out, man. Let me know what you guys think. Yeah, that would be really cool. Let's see here. Death threats, yes. Anything, leave them in the comment section or direct them in the Discord, guys. Discord.crackingcryptocurrency.com if you guys want to play around with us. And if you would like to trade very closely with us, get access to our signals and setups, our indicators, and our webinar series, guys, you can check out premium.crackingcryptocurrency.com as well as access to our private Discord if you guys want to trade more closely with us. And yes, although I'm fairly certain that's kind of a trollish question because, but I do get it a lot. Yeah, my wife doesn't believe in me. Yes, we have a business. We have an attorney. I'm well aware of the legalities of the space that I operate in. I've been doing this for a long, long time, dude. So yes, yes. I'm well aware of what I'm doing. Thank you, though, so for your question. But I get that a lot. And I will continue to be here next year and the year after that and the year after that. And Bitcoin will repump again later. So thank you guys so much for your support. Of course, today was another breaking Bitcoin market update. I'm your host, Justin Wise. If you have any questions, as I said, leave them in the comment section. I feel like I've repeated that like 9 times. I just don't want to go. You guys are so good. But anyways, guys, I'm out of here. Hopefully I've helped crack cryptocurrency for you. And until tomorrow, guys, trade safely.
You